historically, China's not been into projecting power outside of its borders, partly because China's own history is a history of 5,000 years of China breaking up and getting back together again and breaking up and getting back together. And that just maintaining, I think, historically, if you've been the Chinese emperor, maintaining China in its geographical footprint is already a challenge enough that, China as a power has not been extremely expansionary. Now, having said that, there is no doubt that, Xi Jinping is an imperial-minded leader. And when I say imperialist, I don't mean that he's going to go out and invade the Philippines or Indonesia or Kazakhstan and say, okay, we own this now. But that the history of every empire is first and foremost the history of it's a road-building exercise. That's why, in French, we say all roads lead to Rome. And well, they say it in English as well, but all roads lead to Rome, because what empires do is they build roads to bring in commodities cheaper to the heart of the empire, transform them into higher value-added goods, and then ship them out again. Now, through history, there's really two kinds of empire. You got the maritime empires, like, the Brits up until 70 years ago, the Americans over the past 70 years, where you control the oceans and you bring commodities into the heartland, transform them, send out finished goods. Now, there's no doubt that this is Xi Jinping's worldview today. He keeps talking about the One Belt, One Road, the Silk Road Fund, the Asia Infrastructure Investment Bank. The idea is to tie up Southeast Asia, South Asia, Africa, Central Asia, all the way to Eastern Europe, to tie up all these countries to China's economic heartbeat. And that if up until recently all roads led to Rome, in the 21st century, all roads should lead to Beijing. And so, piece by piece, this is what's happening. I'm sure you've seen those maps where you look at 20 years ago, who was every country's biggest trading partner, and 9 out of 10, it was the United States. And today, 7 out of 10, it's China. So, the world is evolving in that direction. The reality is that, cars are a great example of this. China is today one of the more efficient producers of industrial goods. It's producing high quality goods at very affordable prices. That requires a lot of commodities. So that requires, a lot of infrastructure to be put in places that do produce commodities like Africa, like Central Asia. And, in reverse, these guys will receive Chinese goods. Now, from there, the question is, once this trade develops, does all this trade stay in US dollars? Does it make sense for China to go to Zambia, to go to Kazakhstan, to go to Uzbekistan, to build roads, to build railroads, to build gas platforms and pipelines, and to bring all that stuff to China, to pay US dollar for it, and then sell whatever, the cars or the extractors, the telecom switches, or whatever else you care to think, back to these countries in US dollars? It's not obvious, right? It's like, why should this trade be denominated in US dollars? And that goes back to the very first points that I made. I think over the long term, it probably won't be.
And also to that point, there's a lot of criticism, or at least a lot of people think as well, that this type of infrastructure investment with the Belt and Road Initiative is a way to subdue some countries into this kind of, just like the United States did with this economic hitman type of approach of indebting countries into ways that they can only default and seize their assets. Do you think that there's a biased, a very negative way of seeing it? What's your take on that? Like, how's the reality?
Yeah, I was going to say, that sounds great on paper. Where have you seen it occur? The reality is, it's the old story. If you owe the bank $1 million, you have a problem. If you owe the bank $1 billion, the bank has a problem. If you lend a lot of money to Zambia, and then Zambia says, yeah, sorry, mate, not paying you back. What's China going to do? Send troops over to invade Zambia? It's, it becomes hard to do. Now, interestingly, we have a perfect example of the thesis right now, where if you look at Argentina, and you might have seen the headlines over the past week, but essentially Argentina has been staying afloat thanks to IMF loans, which are really controlled by the US loans, and China loans. And funnily enough, today it is the US telling Argentina, if you keep having China loans, then we're going to pull the IMF loans and the US loans. So it's, who's bullying who here? China isn't turning around to Argentina and say, hey, stop taking the US money. It's very much the other way around. So it's, I wonder to some extent, when I hear these arguments, how much of that is a projection of how the Western world has behaved vis-a-vis emerging markets, and whether whether there's you are really going to see China behave in that way. Because the reality is that most of the international organizations, the IMF, the World Bank, etc., they remain completely Western dominated. In fact, if you go back to 2008, when 2008 happened and the world hit the wall, China said, look, we can help. We have money now where, we're no longer the deadbeats that we might have been 50 years ago. So we have an incentive to stabilize the world. It's in our own interest. We're a huge exporting nation. We don't want the world to go down a tailspin. So, we can contribute more to IMF. We can contribute more to the World Bank, but we want a bigger say. We want voting. We, proportionate to to our economic weight in the world and to the money we'd be putting in. And it was the Western world that said, no, we don't want that. We'll take your money, but you can't have a seat at the table. At which point China said, all right, well, if that's the case, I'm going to create my own institutions. I'm going to create the Asia Infrastructure Investment Bank. I'm going to create the Silk Road Fund. And I'm going to go out and, lend directly to emerging markets because, I'm not going to give money and not have a say. And, that's basically where we are today.
Sorry to interrupt this episode, but I'd like to tell you more about what we do at Gold Republic. At Gold Republic, we provide physical gold, silver, and platinum, fully insured, fully in your name, fully allocated, in top-tier vaults, securely saved in Amsterdam, Zurich, and Frankfurt. No paper promises, just real ownership, full transparency on your name. We are fully regulated and conduct regular independent audits of our vaults, with more than 700 million euros of precious metals under custody and 70,000 investors that trust us in the last 15 years. Our top-rated app gives you full control. Track live prices, explore detailed charts, and buy or sell in just a few taps. Whether you're hedging against inflation, currency risks, or financial stability, at Gold Republic, we offer real assets to safeguard your generational wealth.